Welcome, ladies and gentlemen. Commodity-TV here still in Zurich at the offices of Zurich Invest, and now with me another fabulous gold producer, Argonaut Gold, and Pete Doherty, the CEO of the company, wants to give us an update.
Thank you for the time today. I'm excited to be here.
Yeah, me too. Honestly, great company you have and you are running. 2017, I think it was a great year for you guys, so maybe you want to comment a bit on that?
Okay, yeah, I'll take some time on that. We really restructured the whole of the company during 2017. If we looked at the end of 2016 to where we end at the end of 2017, brand new company, new lease on life. Not every year that happens for you. We had some significant changes. One, we brought a new project on, and this new project will produce roughly 60,000 ounces a year.
Nice.
And we did that about 28% under budget. We did it for a total whopping $32 million.
But that's nothing.
It's nothing for the amount of result that we get out of this, and it will be one of our lowest cost operations and a significant producer as we look to the future.
What are the costs of that project, AIC wise?
That's all in sustaining costs are right now looking right around $550 an ounce.
Wow, that's
so
a
very
nice margin.
Very profitable type mine for us. The next project that we undertook during 2017 was to acquire some more ground around one of our existing operations, this El Castillo mine, which sits 11 kilometers away from the San Agustin project. At that project, we were very fortunate to be able to conclude a deal with Fresnillo, one of the first companies to ever do that. And we increased the land package by nearly 3 times.
Wow.
And we were successful through our drilling program to increase our reserves from that project by 75% year over year. So a tremendous result from that project as well.
When you say 75% increase in the resource, what does that translate into mine life overall for the company?
Mine life, yes, this mine was looking to shut down mid-2019, and now we'll be going well over 2024 right now. So extended that mine life significantly, right? And that's what's important here, is not only finding opportunities where we can partner with somebody like Fresnillo, which is a very good company, but also provide an opportunity for their shareholders and our shareholders to extend lives for both companies at the end of the day. The next thing we had happen during the year, very exciting year for us, we're not done yet, but we had a project that we picked up from Primero Gold. It's called Cerro de Gallo. There is roughly 1.7 million ounces of gold identified already, and 35 million ounces of silver, and nearly 150 million pounds of copper. This has already been identified through a full feasibility study. We acquired this property for a very reasonable price of $15 million. So we're quite excited about that project and really finding out what that project can mean for us as we take it to the future. A tremendous land package. I talked about the El Castillo land package tripling in size. This project has a land package nearly 40 times the size of El Castillo. So a very large land package to work within.
How much hectares are that?
We're looking at
square kilometers.
Yeah, we're close to about 40,000 hectares in this particular property.
Nice.
And it's in a very prolific mining district in the Guanajuato mining district. So very excited about that. We additionally were able to complete and finalize and issue a feasibility study on our very large project Magino up in Canada. We presented not only a case for 10,000 tons a day, which we could do on our own, but also a 30,000 ton per day case that we would do with a partner. So very excited about...
What's the capex for something like that?
The capex on the smaller version would be around $300 million.
Okay.
The larger version, the 3 times the size, about $600 million. And production on the smaller would be about 150,000 ounces a year versus 300,000+ ounces on the larger case. So both of those are exciting. They bode well towards the future. So we have some development portfolio as well as some things that we've done internally to really boost the production. So as we look to 2018, because I know that's your next question,
absolutely,
where we're heading in the future. Last year was a big capital spend year for the company, nearly $110 million. So this year we expect the capital spend to be around $50 to $55 million.
So half.
So about half that. Yet our production profile should be growing from about 127,000 ounces, or the top end of guidance, to this year between 165 to 180,000 ounces. So a big improvement in overall production, and our operating costs, bringing down that low-cost mine, will be falling this year. So all-in sustaining costs probably in that $850 to $950 type range. So a pretty reasonable margin that can be achieved for the company this year. That sets us up nicely for next year. 2019, we should be able to extend that production profile out of those 3 operating projects to over 200,000 ounces. The expectation is between 210 to 225,000 ounces. So,
and with again lower costs then?
Again, lower costs one more time. So what we're going to see as we see the margins rise and the capital spending profile falling, we're going to see this cash balance on this company continue to grow over time. This year, the expectation for most of the analysts is between $40 and $50 million worth of free cash that's going to go on the balance sheet. And we would expect that to grow even more next year as we expand that production profile further. So it's an exciting time to be part of Argonaut and where we're going and how things are moving forward at this time. So for the investors out there, this is the type of company you want to be in. Low risk, no debt being carried on the company, and high margins.
No debt.
With
Wow,
cash moving in the right direction. So
how about then rising dividends?
Right now, we're going to be reinvesting back through. As I said, we have some interesting development projects that we think have nice margins on them that can carry us towards the future.
That makes more sense to put the money in the ground, of course.
It does. Right now,
but for the future?
For the future, clearly, once we hit our target of 300,000 to 500,000 ounces, definitely dividends will be coming back at that point in time.
Great.
So,
and can you achieve, let's say, the 300,000 to 500,000 ounces? Do you have to put debt on, or let's say a strategic partner on? Meaning, are you able to self-finance that growth?
Historically, all our growth has come through the cash generation out of the company, just like last year. As we look to the future, we have 2 projects in Mexico that we could build. Both could potentially be 100,000 ounce a year producers. If we see fit to move those into production, that could get us to our goal at 300,000 ounces. And those are about $100 million or less for construction. So our cash flow can clearly get us there.
Absolutely. Yeah.
The project up in Canada that I talked about was a very large project, 5 million ounce resource. So a little bit bigger price tag associated with that. Might have to put some debt on to bring that one on. But it depends on the timing of when you'd bring that forward. So I believe right now we have some good opportunities in Mexico on the 2 projects we already have that are there that we could expand first.
Fantastic. As you are a gold producer and a regrowing gold producer, of course, I would love to have your opinion on the market. How do you see gold? I mean, I don't want to have an exact gold price prognosis from you, but what is your feeling now in the market? A lot of people talk about peak gold, falling world production, for example. On the other hand, the central banks are buying, governments are buying. Then you hear all of the time, that's the highest debt in the world we ever had. We have to put in more security, or like an insurance. You should have physical gold. What's your view on all that?
My view on gold and where gold can go, I'm very happy where we are. I've been in this business for over 30 years, as some of your other clients have been. And seeing gold today around that $1,330, $1,350 mark, I believe that's a very reasonable price, and we should try and schedule our businesses around a $1,200 type price. But looking back at the history of where we are and some of the things you had mentioned, I could see gold rising further. I believe the breakout point is about $1,360. If we pass through that, I can see us moving past $1,400 very quickly and moving up from there. I believe that currently we're at kind of the bottom of where we are in the gold equities type market today. The North American market is trading severely depressed versus that of Asia or over in Australia today. Those equity markets are doing very well. So I'm bullish for the equities. I think the gold equities in North America that you would tap into here would be valued somewhere in the $1,150 market range. And it's not often that an investor gets to get into a commodity like this where the gold today is trading $1,340, $1,350, and you're being priced at 1150 market. So there's already that built-in window of achievement for you as an investor. So I'm excited about that. I think the investor can do well, and that bodes well for us as a company and others. But we focus our business a little bit differently. Try and set that bar a little bit lower, and as I talked about, that all-in sustaining, trying to keep it below that 950 range, that provides a decent margin to be able to generate the cash for the future investments.
I mean, by now it's like a $450 margin for you guys, and I would say that's a nice margin, right?
Right. That is a respectable margin where we can run a respectable business.
How would you see in the mining industry now, for example, the development of exploration? Because I had the feeling after the financial crisis, the markets dried out, exploration did not happen. And to me, it looks a little bit like that now this lack of exploration is really kicking into the market. As larger producers, or like the gold corps and humans in this world, are really searching to replace their reserves, right?
Right. We have seen a dramatic fall off in reserves, and we've seen a dramatic fall in grades that we are processing today for the gold sector. The most dramatic impact I think that we could look at was a result from what happened at the Denver mining centers, where we're seeing things go. In the fall, they run a conference there at Denver Gold Show, and they also run more of an exploration type of program at the Beaver Creek Summit. And when we take a look at what was going on at the Beaver Creek Summit, exactly what you said. Every major was taking an investment in every junior type exploration code, because they had simply pulled back on their exploration in the past. So they're looking for where that growth can come from.
Exactly. Yeah.
And so I'm optimistic that we're going to see some more dollars flow to that space. However, financing has been rather difficult right now. So you're going to have to pick right.
And I think you picked right, honestly, because you have this organic growth over the next years, right?
Yes, we've done fairly well with the things that we have chosen, and we have not only exploration development opportunities to expand the resource bases, but clearly some advanced stage projects that could be moving forward too.
Fantastic. Pete, thank you very much. It was a great insight, great update. And keep us posted, please, because it looks like you have some 3 good years of a big run in front of you.
Right. Okay. Well, thank you very much.
Thank you very much.
All right.
Thank you. Ladies and gentlemen, it was Pete Doherty, the CEO of Argonaut Gold. And you heard it, the company has 0 debt, which is quite unusual on that size, and also has a lot of organic growth. So the company will grow even next year over the, let's say, 200,000 ounces mark, and has the clear view to become a 300 to 500,000 ounce producer within the next years. Then, of course, they want to make, they will make a lot of money, maybe paying some dividends also to reward shareholders. And I would say check out the company. This is a great opportunity here in the base of the cycle, and you should have a look on that. Thanks for watching us. Bye bye from Zurich.